Good morning, everybody. Welcome to today's 1Million by 1Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator for startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP and 10 million jobs. And in support of that mission, we do these free mentoring roundtables week after week after week, almost 48 out of the 52 Thursdays in a year you will find us here. This is the 368th episode of this format of mentoring. The event is being recorded. You will find all recordings on our YouTube channel, which is 1M1M Roundtables. And our Twitter channels are 1M by1M and @Romana. You can follow us there. If you're live tweeting today, please use 1M1M, hashtag 1M1M, and that will string things together. These are the call-in numbers. We're not quite ready for call-in yet. On your screen, I will put up later when we are ready these numbers. But this is a roundtable, so we want you to participate as much as possible. So do line up your questions, do plan on participating. And meanwhile, while we are doing the rest of the program before the call-in line is open, please use the public chat to weigh in, ask questions, engage in whatever way possible. You learn the most by engaging for sure. Let me introduce you to our special guest today, Cindy Padnos, founder and managing partner of Illuminate Ventures. Cindy, welcome. It's great to have you here.
Thank you. It's really my pleasure.
So tell us about Illuminate Ventures. What is the focus of the firm? How big is the fund? What size investments do you make?
Yeah, so Illuminate, Illuminate, we're on our third fund. It's a $30 million fund. And our focus is exclusively in the enterprise or B2B category. That means we invest in startups that are software as a service, business applications and solutions, cloud computing, mobile software, but all of it targeted towards the enterprise.
Mm-hmm. And what is the deal size that you do? What is the denomination of investment that you typically put in?
Yeah, good question. So we're typically a company's first institutional financing round. We don't do notes, and so we're frequently coming in after angel investors and before a Series A. Typically, our round is called a Series Seed, and the size of that round can range anywhere from $1 million to $4 or $5 million, depending on really the progress the company's already made.
And what about geography? Is there any kind of, I remember when we talked some years ago, you were a big champion of female entrepreneurs. Is it all kinds of investors, all kinds of entrepreneurs, or is there any kind of bias towards women entrepreneurs?
Yeah, I love that. We don't have any bias. In fact, we remove the bias. That's the whole goal.
Okay.
So what we've done is we have created an environment we think that is really conducive to expanding our deal flow. And that means, frankly, that it ends up being more inclusive is the way I would look at it rather than biased. And the result of that is super interesting. More than half of our portfolio companies do indeed have at least one female co-founder, but we never use gender or ethnicity or age or anything else as part of our investment criteria.
Fabulous. And what about geography?
Yeah, sorry. We are focused exclusively on North America in terms of our investments, so that includes Canada. That could include Mexico, but we are today, I would say 80% of our investments are in the United States and 20% in Canada.
But it's not a Silicon Valley exclusive. You invest all over the country and all over North America.
Yeah, sorry. That's a really important question, I think. One that we've done a lot of homework around and have had over the last 5 years an interesting focus of being open to investments outside of the Bay Area. Our portfolio today, roughly a third is outside of the Bay Area, and they're in places like Philadelphia and Pittsburgh and New York, Seattle, Santa Barbara. We're about to make an investment in LA. So we have definitely a little bit different focus than many small firms do.
Tell us what trends you're seeing in your deal flow.
Well, you know, because we invest in the enterprise space, we tend to see entrepreneurs that are, frankly, a little bit more experienced. They've started a company before, or they've been part of a startup before, and so they come to us with a really interesting set of knowledge about the space that they are building a company in, typically. Now, that can't always be true because some of these companies, frankly, are doing things that are de novo. So, for example, we have a founder who has built a really interesting company in the industrial Internet of Things category. That's a category we think is very interesting and has lots of opportunity to grow and prosper. But it would be pretty tough to say that someone's a serial entrepreneur in that space because it's a relatively new space.
Right. So let's flip that question around, and now that you have been in this business for a while and you have an investment thesis, what are you looking for? Can you pinpoint where do you think, where do you want to invest in, what kind of industry trends, what segments of the B2B space are of particular interest to you?
Sure. We tend to invest in companies that are leveraging, I guess I would call it the exhaust of all of the data that is being collected today. And what I mean by that is that they take these vast amounts of big data that we all like to use that term, but the vast amounts of data that are collected by sensors, that are collected in our SaaS business applications, and they mine that data, and they do incredible things with it. Those are the kinds of companies we're typically looking for and invest in. They are leveraging machine learning and other AI-related techniques to build solutions that answer business problems that, frankly, in some cases couldn't be answered at all before, and in others might have taken, a huge number of man-hours or effort to determine an answer, and today can be done in virtually a click of a computer. Maybe an example or two would be helpful. One of our more recent investments is a company called Nitrio, and that company basically captures all of the sales data, all of the communication that's going on between a sales rep and their customer. And from that data, whether it be emails or phone calls or demos, they can extract from that really interesting insights. Those insights have to do with which sales are most likely to close, which questions are asked by customers most frequently, which sales reps are actually best at answering which types of questions. And I could go on and on, but those are questions that I know because I've been a VP of sales, early in my career. We used to spend hours and hours scanning through people's, emails together and the communications with customers trying to figure out what was going on. And now it can be done in a completely automated way. It's pretty exciting.
So AI is a big trend, it seems, for everybody we are talking to. AI is a big trend. Are there other, we also hear cybersecurity in the B2B universe. Cybersecurity is a big trend. Is that something that you invest in?
Yes. In fact, we're working with a company right now that we're likely to invest in that is in that B2B cybersecurity space. They're focused on the front end of the process, though, meaning what now the industry likes to call development operations security, DevOpsSec. My gosh, it's a mouthful, but they are in the business of trying to prevent intrusions by identifying gaps and flaws and other issues long before the product is even released. It's sort of the holy grail. If you can get a product foolproof before it goes out, that's obviously a whole lot better than what we've experienced recently.
Mm-hmm. So do you want to cite any other examples? You've already done a few of these examples of investments that you've made in your current portfolio, and give us some insight about how you decide on what to invest in. What are the criteria? How do you parse your deal flow?
Yeah, good questions. I'd love to. I'd love talking about our portfolio. That's pretty much the most fun thing that I get to do. So take a couple of examples. One of them is an example that may sound like something a seed stage, early stage investor wouldn't do, but it's a very interesting company. They're located in New York. The name of the company is Cafe X Communications. And we were introduced to them by one of our advisory council members. And what the company does, and what they did at the time we invested, was a call center platform that was WebRTC based. But the reason I say why wouldn't we possibly invest is because they were a spin out. They were spinning out a very deep platform that had been built within a services business. That's a hard thing to do, but we had a lot of faith in the founder. We talked to many of their prospective customers, and the company spun out with 30 employees, intellectual property, a real platform already built, and in their first year in business did over $3 million in revenue. How did we decide? It's a whole variety of things, I would say. One, I personally have a background having been VP of marketing of a company that served the call center community. So we knew the customer set and the business problem pretty well. It was referred to us by someone we knew and trusted who was also investing in the company. It was a founder who had built successful businesses before with an extremely credible and powerful team. And it was based on what at the time was very new technology, WebRTC, and solved a real business problem, and there were customers we could talk to. So you add all of that up, and it was very much a winning equation.
Yep. So I have a specific question that relates with our community. We have a global base of entrepreneurs, and very often entrepreneurs have their development teams elsewhere, whether it's India or Eastern Europe or other parts of Europe, but they have North America companies. They're aware of the fact that if they're going for enterprise customers, North American customers are the primary customer base they want to go to, etc. How do you look at those companies? How do you define North American companies? Do these kinds of companies fall within your scope, or are they outside of your scope?
They're well within our scope. Most of our companies, in fact, have at least a portion of their development resources offshore. So, as an example, we recently invested for our new fund into a company that has their entire development team in Australia. And the CEO and two other of the founders and senior members are here in the Bay Area, and they plan to build out much of the rest of their team, sales, marketing, et cetera, here, because North America is where their market is. We have a team with a development team in Eastern Europe. We have another in India. But I will tell you, interestingly enough, when you're here in the Bay Area, having a development team in Philadelphia or in Canada can be just as helpful as having one in India.
I completely agree.
Yeah, and so we've had a very interesting focus on outside of the Bay Area, as we talked about before. And one of the approaches we've taken to that, we tend to do experiments. And an experiment we started last year was something we call a student in residence program. We have a part-time student now at Carnegie Mellon University in Pittsburgh who is doing deal sourcing for us. He was a first-year student at the master's program at the Tepper School there when we brought him onto the team. He participates in all of our deal flow calls on our Mondays and Friday calls, but also we found him an internship with one of our portfolio companies here in the Bay Area for the summer. So it's really a virtuous circle on how he's sharing deal flow, we're bringing more of the Silicon Valley ecosystem to Pittsburgh, and we think it's going to be a really nice collaboration over time.
Very, very nice. So I'm going to ask you some broader trend questions. How do you process the current investment climate where capital is moving further and further upstream? You mentioned that you come in, you can't kind of come in before the Series A investment, but after the angel investors. So it sounds like you have identified the Series A gap and positioned yourselves to mitigate the Series A gap. Can you elaborate?
Sure. So it's always feasible. I shouldn't say always, but it's generally feasible for an entrepreneur to raise capital from friends and family, and you know, the doctor next door, whatever it may be. But there's, generally speaking, a pretty significant gap between that and what it takes, especially in the B2B world, especially in the enterprise software world, to get to that next step of raising a full Series A round. Today in the market, the expectation is that a company is running at somewhere between $1 and $2 million in annual recurring revenue. So, you know, somewhere around, $75K to $100K at minimum in MRR, monthly recurring revenue. So that's non-trivial, especially if you're selling something like developer tools that are sold at, you know, $500 a year, or other, you know, low-end or products targeted towards the SMB space. And so we have found that it's really an important role for us to play to help those companies get from minimum viable product, from MVP, the rest of the way to that $1 million to $1.5 million in recurring revenue. That's the role that we play. We tend to come in and help with go-to-market strategy, with identifying and finding, you know, perhaps even the first customers and business partners, channel partners, and iterating through that process of which you know, customer set may be the best low-hanging fruit to get started with.
You know, my observation is the early stage investment game has kind of split into almost like 4 different segments. You have the, you know, individual angels, or, you know, micro funds that are maybe 5 million to 10 million funds, or, you know, individuals who do the very early stage, and of course friends and family. Then you have funds like yours that do the, you know, getting up to 1 million ARR phase. Then there is another set of investors who are these $50 to $100 million funds who do the $1 to $3 million Series A. And then there are the larger funds. If a company is already ready for a 5 to 7 million or 5 to 10 million Series A, then the larger funds can do the Series A. Otherwise, they are Series B, Series C kind of funds. And that's a big change from the way venture used to be, right? I mean, the $300 million funds were doing the Series A at one point.
I think you're right. The only nuance I would add is that that third type of fund that you mentioned, what I see them calling those next rounds that are the small post-seed round is exactly that, post-seed, or a seed 2. They generally aren't called a Series A because you actually want to be careful about signaling what the message is you send about what stage your company is really at. So the other thing that I think is a very important nuance for an entrepreneur is that there are a variety of different types of seed rounds. The kind that we avoid, the kind that we won't touch with a 10-foot pole, and if I was an entrepreneur today, I wouldn't either, are those that we call club rounds or party rounds, where 6 or 8 or 10 or 12, and I'm not kidding, small funds come together, each write a $100K check to fund that company with, you know, $1.5 million for their seed round. That's a very dangerous situation to be in because no one investor has any real skin in the game. Frequently, there's no board structure to it. When it comes time to raise the Series A, if the company isn't really fully ready, what you find is that no one is stepping up to give them additional capital or to help make the introductions because, again, it just was never an opportunity that was important enough to them to put that kind of effort into. We structure our seed investments with 1, 2, maybe at the most 3 other co-investors, but typically 1. I think our average across our entire portfolio is 3 investors total in a round. And we think it's really important to be investing with like-minded investors. It's also a bit dangerous, and I'm sure you've talked about this before, to have a very large fund writing a small check into your seed round. Because
very dangerous.
Significant signaling risk that that fund doesn't come back to lead the Series A. The question out there is, why not? What's wrong with the company? And it may have nothing to do with the company. It might be as simple as the fact that that partner had another company that they financed 3 months ago and just can't take on another new investment right now.
Yeah. So, I mean, what you're talking about is this trend that has come together in the last, decade, I would say probably more in the 5-10 years, is 5 years or 6-7 years, is spray and pray, right? There's a lot of funds who are putting in a little bit of money in a lot of deals and just not taking any board seats or any real, as you say, skin in the game, but are in a lot of deals. And that is there's a mode of investing that has become very popular in the industry right now.
Yeah, I totally agree. And we invest, I guess, in a way that I would say is with conviction. When we invest in a company, we're putting meaningful capital relative to the size of our fund into that company. Yeah.
Which is the classical venture capital, the way Silicon Valley was used to operate before.
I like to call classic versus old school.
Pardon? Come again?
Sorry, I like being called classic versus old school.
So, switching gears a little bit, how do you parse Unicorn Mania? As a seed investor, and I'm calling you a seed investor because you're kind of pre-Series A, you could get buried under, if you have a hot company, you could get buried under later stage liquidation preferences when the company gets flushed with capital. Let's say the investment thesis has been proved, there is traction, et cetera. The company becomes a hot company, gets on the radar of the bigger funds, and they just flood it with capital. But there is also all these terms. How do you protect yourselves?
Yeah, good question. So most of the unicorn companies, and it's not unique, but most of them are in the consumer internet world, which is not a world that we operate in. We, again, invest only in the enterprise world. So relatively speaking, the likelihood of that happening to us is much lower. And it's by choice. I mean, we fully understand that we prefer to invest in more capital efficient companies. Even our company, Exactly Corporation, which went public, raised in total less than $100 million to get there. We have another company right now that's running at an $80 million annual run rate that took $60 million to get there, and they've been profitable and cash flow positive for 3 years. So it's not impossible for us to be investors in a unicorn. In fact, we have one in our portfolio. But part of what we have the opportunity to do along the way, since we're typically investing at, certainly sub $10 million pre-money valuations, when companies get to be multi-$100 million valuations, and investors are trying, new investors are trying to get as much as possible ownership of that company, we do have an opportunity to take some liquidity from time to time. And we have more than once chosen to do that, but typically only a portion of our presence in the company, a portion of our ownership, so that we're along for the ride, but we've already seen, a nice outcome somewhere along the way as well.
So you have co-sale rights with the founders?
We don't, with the founders we certainly do, but we don't always exercise them, yeah.
It's a right. Yeah, so that's, by the way, folks, this is something that you will encounter. By the way, one point I want to make before we move is that there are actually, Unicorn Mania is not just B2C. Unicorn Mania is happening in B2B as well, and we've seen a lot of companies that are completely flushed with capital at this stage when they start finding traction and becoming quite, prominent and sought after. But the other point that Cindy just made, and we were discussing about this co-sell rights, is something that founders should be aware of, is that you want to make sure, as you're negotiating your early stage investments, the pre-seed, seed investments, even the small Series A investments, especially if you're working with individual investors, small funds, etc., you have to make sure that if you are successful, they don't stand to get screwed. So one of the ways investors like to protect themselves is with co-sell rights that they may or may not exercise, but at least they would have those rights so that they can, be whole in this process. So Cindy, one of my observations is that we're in 2017. Lots of stuff have already been built. And nowadays there aren't so many wide open opportunities, especially in B2B out there, that, you can build consistently billion-dollar companies on, which is the classic venture capital model of Silicon Valley. But there are many, many niche opportunities, capital-efficient opportunities. Some of these businesses need to be built for very small amounts of capital, like $1 to $2 million, and sold for, let's say, 10 to 15 million, or even smaller, maybe invest 250K to 500K, sell for 5 to 10 million. Do you have appetite for these kinds of investments? What is your, analysis of this dynamic in the industry?
I think those types of businesses are really terrific business opportunities. And there are businesses that an individual can have a very nice outcome with, but they are not typical of what would be appropriate for a venture fund. A venture fund has to plan for losses. Our firm is pretty unusual in that we have as low as a 10% loss ratio, but the average at the seed stage in the industry is between 30 and 50%. So if you're investing with an assumption that some are going to just be washouts, you also have to know that many are going to make up for that. And that means returns that are 10x and above on some others in order to get in the industry, an average of 4 or 5x return overall on a fund is what you're looking for. So as you step back and say, I'm an entrepreneur, and I've been one. I've been a founder and CEO of a venture-backed startup myself, and I had to make that decision. Do I go out and raise venture capital? Because once you've done it, you're kind of along for the ride, so to speak. But frankly, I would think that the best way to fund that type of business would be through angel investors, friends and family, even bank debt in situations where you're able to bootstrap a company to a small recurring revenue stream. That is a very bankable company because of the recurring nature of the revenue. It's very predictable, and that's something that financial institutions will back. So it's a long answer to your question, but I think the right way to look at this is what type of investor do I need for what type of company, not make the assumption that every company needs venture backing.
Right. There are actually, there is a bit of a trend of people forming funds around this investment thesis, and I know some of them, but they work very closely with corporate partners. They almost work closely with corporate partners to understand, what would they want done outside of their own, premises, so to speak, and then kind of have an understanding of the product roadmaps, what they would acquire and so forth, and fund companies that are well positioned into that. So these are small funds that would work with entrepreneurs in this mode, but with a very tight corporate relationship where the exit is better understood and the product roadmaps of those corporate acquirers are better understood. So it's happening, so one way to look at this trend is the way you're looking at it. Another way to look at this trend is that the loss, if you cut down on the loss ratio, and if you do have a close relationship with a set of acquirers such that if you have a decent return on each of the funds and the loss ratio is very low, that is another way to deliver a 4 to 5x on the fund as well.
It is, but I think the entrepreneur has to know they're signing up front for an acqui-hire to become a part of that large corporation, not an entrepreneur, and that the exit is likely going to be, it depends on the goal of the entrepreneur, I would say.
Yes. But, I mean, their pitch is basically, for 2 to 3 years of work, you make $5 million, and what is wrong with that picture? And I kind of think that is a very nice picture. If you have,
that would be very attractive. It doesn't always work out that way.
No, it doesn't, of course. All right, well, last question, exit. You talked about Exactly being one of your companies that has already exited. Do you want to talk about any other exits?
Well, sure. I mean, Exactly is exciting for the fact that it first went public in mid-2015, which was a very difficult time to IPO, and then about 2 months ago was acquired for a little over $500 million by Vista Equity Partners. So a very, very successful outcome for that team. Original founding team still there, which really makes me feel great. Chris Cabrera was the founder and CEO, and really, really great performance. We've also had acquisitions in our portfolio, numerous. One of our originally Pittsburgh-based companies was acquired by Autodesk. It was a web-embedded 3D development platform. Very interesting technology, being able to do collaborative development in the cloud in 3D. Another of our companies that was in the DevOps area was acquired by New Relic about 18 months ago, and they were building a platform that was being used by cloud development centers and operation centers to be able to monitor all of their servers for drift and other issues. Another company that had built a data science platform really designed to allow data scientists to do their work and collaborate rather than always having to build tools around their platform, as a company called Sense was acquired by Cloudera, and is really the core of the recently announced new platform that Cloudera has just come out with. So those are a few examples. We've had some really exciting outcomes within the portfolio, and looking forward to more in the future.
Great. Well, wonderful conversation. Thank you for sharing your perspective, and look forward to doing some more work with you.
Thank you. My pleasure. I really appreciate the opportunity.
Bye-bye. Folks, we're going to switch to the entrepreneur pitch portion of the program today. I'll give you a few thoughts just before we get started on that. Remember, this is a working session. We work on your strategy here. We are completely on your side. There's absolutely no other agenda but to help you move forward, put one foot before the other, and help you remove your roadblocks or, challenges. So feel safe. This is not, designed to do anything other than helping you. Now, if you disagree with my feedback, that's fine too. It's your venture. You will do whatever you want to do, and that's just fine. Remember one thing, though, not all businesses are structured to be fundable. So not all businesses can raise money, not all businesses should raise money, and raising money doesn't necessarily guarantee success either, and that is a fact. So you're going to need to understand your business, and you're going to need to understand your business's fundability vis-a-vis how funding happens in the industry. So this is just a very complex discipline these days, and as you can tell from the discussion I just had with Cindy, it's getting more and more complex. So please try to understand what's happening, why it's happening, how it's happening, and accordingly navigate. Okay, we are going to start with Miguel Ortiz and Amarilis Ortiz. So if you could Miguel Ortiz and Amarilis Ortiz, please unmute your line and tell us what you're working on.
Thank you. Good morning. This is Amarilis Ortiz. I'm the co-founder of OLB Tech, and this is CEO Miguel Ortiz. We're developing technology to make life easier and more enjoyable. We're looking in Atlanta for them. Thank you. Well, women all around the world are pressed by the little time that they have for themselves. And that's particularly true for the executive woman. She has worked so hard to get this presentation done, which is going to lead her to close our main business contract. She got her suitcase ready, her suit is ready, she did her hair, and right when she's heading to the door, she realizes that one of her nails is chipped. She looks out, snowing, there's no time to get back to the salon. What do you do in a situation like that? How to solve that? She has worked so hard and prepared herself so hard. Next, please. And how about a super mom, the one that has 3, 4 kids? She works, but she also is the one that takes kids to soccer games, to piano lessons, to ballet. In the midst of all that, her husband calls to her cell phone, honey, we have dinner with friends tonight. There's no time to go to the salon for this woman. And how about teenagers? Women build relationships with the things that we do together. And painting nails, putting makeup, and talking about boyfriends is a weird or ritual among women. So what's the problem that we address here? Nails get chipped easier than what we want or expect. The drying process usually takes longer than what they say. Think of getting your car keys within your purse 5 minutes after getting your nail done. The time that it takes you to, in your agenda, which is already packed. The cost of manicures, which changes from spot to spot. Distance and weather, those 2 factors are crucial for our agendas. The limitations of having one nail polish color when we women usually change our outfit twice per day. The frustration of having invested so much time and money and getting our nails chipped. And why not self-esteem? Women, we communicate with our hands, and not being able to express ourselves, especially in a business meeting, it is a problem. Next, please. But we have a solution to that, and the solution is NAPS, Nail Automatic Painting and Drying System, which is an automatic portable device that paints and dries the nail in less than 10 minutes. Next, please.
We have developed a working prototype, a proof of concept, and NAPS is a 3-way product. We basically have the portable device. It's lightweight. You can carry it on with you. And we also have the disposable cartridges with the nail polish on it, and also an app that would allow the end user to store the wardrobe and be able to match it to the nail polish available in the nail and the disposable cartridges. Next, please. Now, the market. The total available market in 2016 was $18.6 billion. The serviceable available market is $9.3 billion. And the serviceable obtainable market in the 5th year, we believe we can get up to $465 million. Now think about this, 52% of the nail polish market is between the United States and Europe. Next, please. So the market statistics, until 2015, the beauty industry was about $301 billion. And as you can see, the nail polish industry keeps growing, steady above $8.5 billion, and that's only in the United States. According to a census and study done by Statista, 117.3 million Americans use nail polish or nail care products in 2016. That's roughly 42% of the total population of the United States. Next, please. So the revenue stream. We think that avoiding the retailer is a big thing for us. We plan to set it online. The NAPS, also the dispenser, the nail polish dispenser, and an app that we will come first for the freemium business model, 1st year free the next year $2 and on. Also, we will include other beauty products with our own private label, making sure that we have a brand recognition. And since Internet of Things, the device will be connected to the internet, it would allow us to get some data from which type of combinations women do, which color sells the most, so we can actually have this information sold to nail polish industry. Our model also includes
Miguel, what is the price of the product?
We are aiming to have it under $350, the device, and under $30, the nail polish cartridges.
And how, I mean, $30 per nail polish cartridge is a very expensive price if you compare it with a bottle of nail polish. How many applications does one cartridge do?
Excellent question. The nail cartridge will bring 2 colors at least, and it will provide women to have their nails done at least 10 times.
10 times, okay. And the numbers that you're quoting here, you know, so do you understand what's the difference between a bottom-up TAM analysis and a top-down TAM analysis?
Could you repeat the question, please?
Do you understand the difference between top-down and bottom-up TAM analysis?
I have a rough understanding, but if you'd like to explain, I appreciate it.
So what you have here is a top-down number. You really need to understand what bottom-up TAM analysis is and calculate your market size based on bottom-up and not top-down. That's my #1 feedback. So I don't really have time to do a tutorial on bottom-up TAM analysis. If you need help, you can use our curriculum to learn that. But that's one of the feedbacks I have, is I can't really gauge how big a market are we talking about in this case. I also don't believe that this app is necessary, frankly. I mean, you have a dispenser and you have a bunch of cartridges. That's about all somebody needs to use your product. I don't think they need an app. At least it's not a must-have. Maybe it's a nice-to-have, but it's not a must-have. So your real business is the dispenser and the cartridges, and I'd like to understand what is the market size of that, and you need to understand to be able to sell this to investors. If that's something that you're looking for, you're going to need to calculate the bottom-up TAM analysis. Now, then the question is, does it work? Does your product work? What validation do you have that this product works?
I might also answer some of that. This is what we've done so far. We've done 300 face-to-face surveys, actually having conversation with them, giving them different written surveys, anonymous, and they have all validated the problem. It is a fact that women have issues about keeping
that's not my question. The problem is not difficult to validate. This problem is very easy to validate. The question is, does your product work? Does this dispenser cartridge combination actually do what you claim it does?
As of now, I understand your question. We are we have, as we mentioned, a prototype, and yes, it provides the value proposition of painting the nails. But one of the reasons that we are looking for funds is actually to make it as precise as it needs to be. That is why we're looking for funds. But yes, we have the MVP that actually is been 3D printed. It provides the nail polish to the nails in less than 10 minutes. We're just working on the retooling to making it as accurate and precise as it needs to be.
So this is the kind of product that is ideal for crowdfunding. If you've got 300 people that are validating the need and are interested in buying your product, I would put them together in a crowdfunding campaign and get them to finance your MVP and validation of whether the product works or not. Whether you can go to the next stage or not depends on whether your product works. And that needs to be validated, and crowdfunding is the best way to validate this.
Okay.
So your question is actually irrelevant. The question about valuation is completely irrelevant. Your real question should be, how do you validate, how do you finish your MVP and show that you have a working product that does what you're saying it does, and the best way to do that is with crowdfunding.
Okay.
Okay? All right.
Thank you.
You're welcome.
Thank you very much.
You're very welcome. We're moving to Raj Iyer. Raj is actually a 1M1M premium member, and we are going to look at his investor presentation and discuss his investor presentation. So Raj, please unmute your line and take us through your presentation.
Hi, Shravana. Good morning to you. Are you able to hear me?
Yes, I can hear you fine, Raj. Go ahead.
Thank you. Shravana, we've discussed this quite a bit. I'm sorry I've not been able to come to the earlier roundtables because of my health and travel and so on and so forth. I will actually begin, even though the description is in the second slide. So I would just like to tell you about what iCustomMadeIt.com is. iCustomMadeIt.com, it's a two-sided marketplace which connects the makers of all things custom in 30+ categories like jewelry, furniture, apparel, accessories, ceramics, perfume, automobile, so on and so forth, with customers looking to buy one-off unique bespoke pieces. Customers can get anything they want custom made, and makers can make a living doing what they love. Slide 2, please. So like I said, we are in 30+ categories. We are into where you can collaborate with makers all around the world, create one-off unique stuff. We are also heavily into 3D printing and DIY, do-it-yourself design applets, where you can go and you don't need a creator. You know what you want. There are easy-to-use design applets in about 8 to 10 categories, like shoes, bags, so on and so forth. You can design something yourself. Next, please. Just an example as to how the platform works. Say you're a buyer and you want to buy a pair of, say, customized leather shoes, which is unique and you want it the way you want. So there are 3 ways the platform operates. Number 1, you like a shoe on the platform, you buy it as is, as you do on other e-commerce sites, and the same thing is made for you. Number 2, you like a shoe on the site. For example, say the shoe is black in color, and you want it in tan color to match, say, your ensemble. You can buy the shoe and request the maker to make a similar shoe. You love the design, but you want it in tan color. So option 2 is you're customizing an already existing product. Option number 3, you've seen a pair of shoes somewhere, say maybe in a magazine or in a movie or whatever, and you have an image of that shoe. You can upload it onto our platform, and something, let me state here, similar will be made for you. It will not be copied, but something similar will be made for you by our exquisite creators. Once you upload your request, it is sent across to the numerous makers on our platform, who then bid for your project requirements. Once you get it, based on what your deciding factor is, it could be the budget or it could be the expertise of the creator involved, you can award the project to the creator whom you like. Next, please. Yeah, this is just the thing about a 3D marketplace. This is one of our biggest, of course, categories. We do mementos, we do figurines, we do mobile covers, 3D mobile covers with your signature behind to give it a personal approach. Prototypes, we serve some of the top corporates for their prototype requirements, architectural prototypes, medical prototypes. Right now we're working on an artificial prosthesis or an arm for a patient. Next, please. These are some examples of a DIY applet, the way you do. So you can design your backpack the way you want, with your name written, the colors, the flaps, the panels different. You can design your own formal shoes. Say you want something where you want to have a leather shoe, but you want to have a bit of denim in it, you can do so. So anything what your heart desires, we're here to fulfill it for you. Next, please. Other than this, we are also into B2B, where we serve a lot of corporates for their business essentials. So we have a gamut and array of categories and products. which can be customized as per the logo, the name, the special message to the employees, mainly for the customer engagement and employee loyalty programs. Next. Yeah, so some of these, so we are Eon watches. These are customized bespoke watches. See, you have a watch, a lot of us have watches. This arose from my particular requirement. We all have something which is very valuable to us, which is very emotional and sentimental to us. So I had a watch which is given to my, which my great-grandfather has passed on from generations, and I was not able to wear it, primarily because it was outdated. So I got the whole thing redone, and a lot of people loved it. So that's the reason we've launched Eon watches, which is our own brand. Any Indian friends of mine who are here looking at this, you must have seen the Akshay Kumar movie Rustam. Some of the watches which he wore, the pre-era dated, 1950-60, were designed and sold by us to them, right? And now we are working on a few more projects in the Bollywood and the Tamil and the Kannada film industry for the same. Moving on, Garnet Glow is bespoke tea. It is tea where everybody's palate is different. What I like to drink is not something maybe you would love to do so. So you can mix and match. So say your wife loves green tea and you don't, you hate it, but then you can mix say chai masala in that tea. So I mean, what we tell our customers is dream the way you like it, the way we make it. This is one of our top products in the corporate gifting industry, right? Other than that, we, like I told you earlier, we do promotional gifting, we do customized fragrances. So you can create your own fragrance in small 10 ml bottles, which we ship across to you, and if you love it, you can order a bigger bottle. The next one is customized automobile kits, and this is something which I'm insanely proud of. We tied up with Dilip Chabria. People in India will know Dilip Chabria and DC Motors. The DC has always been into four-wheeler vehicles, but this is the first time they've got into two-wheelers, and the entire product design, the inputs, and the need of the market was provided by iCustomMadeIt. So this is a joint collaboration between iCustomMadeIt and Mr. Dilip Chabria. We've launched the first set of two-wheeler kits, and it has been a resounding success. Delivery starts from next week. Next, please. These are some of our top categories. Clothing accounts, clothing and accessories account for almost close to 48% of our sales, and so on and so forth, leather products and automobiles. So we are one of the only platforms in India which cater to customized bikes and motorcycles, where a customer sitting in the comfort of their home can pick up a particular product, what he wants, or if he has an idea, he can tell us how he wants his motorcycle to be, and we do everything for them. If he has a new motorcycle, we pick it up, we send it across to a maker. The customer is always updated on what is happening with the motorcycle. His ideas and his approval is taken at every step before the motorcycle is developed. So he exactly knows what is happening. Or two, there are a lot of people, customers in India who say that they want us to procure a motorcycle on their behalf, say a second-hand one, and do the entire ensemble. We do that as well. So these are the categories, and these are our top cities. Next. So in India, the sector is highly fragmented on the demand and the supply sides. Most of the creators, and we are proud to have around 4,000 of the best creators in India on our platform, and some international creators as well. The beauty part is almost 65% of these creators have never transacted online before. So it has always been an ethos or a policy that the creators on iCustomMadeIt.com, the products on ICMI should not be available anywhere else, Accra, Flipkart, or on Amazon.in. Our only competitor, I would say, even though they are not present in this part of the industry, is CustomMade.com in the US, which is doing fantastically well. Yes, they've gone through the troughs of highs and lows, but they have stabilized and they're doing pretty well right now. They have, they do almost close to 24-25 million of transactions in a year, right? So we are totally into bespoke, and we want to shatter a myth that bespoke is expensive. So whenever we say that we need something bespoke, people think that it's going to be exorbitantly expensive. No. So what we want to tell them is bespoke is equivalent to, if not, slightly higher than modern retail, and it is custom made to your size and taste. So once you own a bespoke product, I don't think you will ever go back to retail, right? Next, please. And this actually, we were in a bit of a jumble, and I thank Samana because she gave us a lot of insights, in fact. And this is what, when we did a bottom-up TAM analysis. There's some messages coming in. So is that something I should look in, Samana? Sorry to interrupt.
What was that?
Some chat messages are popping up, so.
No, we'll look at that later. Let's finish your presentation. I need to give you feedback first. So wherever this echo is coming from needs to be dealt with. Okay, it has stopped. So keep going.
Is the echo coming from my end?
No, I think the echo is gone. So we'll deal with it if it comes back. So let's just keep going.
Right. So this TAM looks, bottom-up TAM looks very simple, but we were really not aware of this until I got onto this platform, and with a little bit of nudge from Samana, I was able to get into this. So the estimated e-commerce market size, right now we are in India, because we want to plug all the loopholes out here before we go international. Estimated e-commerce market size is in India is 14.5 billion, and the number of online shoppers are around 8.23 crores. This is updated data as of the last 4 months. Estimated spend per user is INR 12K in INR, and we want to target 20% of online shoppers who would like to go for bespoke or custom, which is a point in 1.64 crore. And we assume that the average spend per user on ICMS, though we have our what we are in business for the last 3 years, the average spend per user is around $200 to $250, but we're still assuming that the average spend per user on ICM will be only 1,000 rupees, right? Which gives us a market size of 251 million. And now this is only for India. On the right-hand side, we've also stated the market sizes if we go global, but we are not looking into that right now. Right now, we are focusing on India currently. Next, please. This is the beautiful part of it, the B2B part of it. The estimated custom gifts market size is around 12,000 crores. Total number of companies with 100 plus manpower, courtesy LinkedIn, is around 33K odd. Total employee strength is 1.5 crore. We plan to just target 5% of this, which is around 7 odd lakhs. We also assume that the average spend per employee done by a company annually is a low 2K, even though we know it's higher, but we assume 2K, which gives us a total available market size in B2B of 23 million. Now, we've been very, very, very pessimistic on this, which gives us a total available market size B2B plus B2C of the earlier slide of 274 million. Next, please. This is what we achieved this year. We've done GMV of 7 crore plus, 3,000. It's about 4,000 orders. This is our average ticket size, about $75, without the motorcycles, of course, which is a high ticket item. Average ticket size of about $210 if we catch the motorcycles also into account. I'm sorry, I have to update this. It's not 2 lakh plus monthly. We're doing about 600,000 page views a month. Next, please. I think we can skip this because there's more of detail. I would love to get your feedback, Ramana, more than me going through all this. Our CPO
I'm listening to you to see if this is going to work as an investor presentation, and I'm going to go back and take you through a round of feedback for all of this. So let's actually go there.
Right. So our intention is to capture 30% market share, which works out around $80 million in the next 3 to 5 years. This is the market size what we're looking to tap. However, I'm not saying that in the next 3 or 4 years we'll be able to actually get around to this much with the current this thing. But yes, this is a market size which is possible, and if we go international, we have large TAMs. So it gives us a lot of headroom to grow 10x from the market size.
So currently, what percentage of your business is B2B versus B2C?
60% is B2B, 40% is B2C.
And as we have discussed, Raj, this business, if you want to raise money right now, you're going to need to raise money based on your B2B investment thesis. So I'm going to go back to the beginning of this presentation and give you slide-by-slide presentation of what needs to be changed here to make this a good investor pitch that is, well captures your B2B business. So the problem with this presentation is it's a B2C presentation and B2B is an aside. It's an afterthought, whereas the business that we believe that we are going to be building here is more a B2B business. The fast growth business is a B2B business, not a B2C business. So the first thing you need to state right here is that currently your business is 60% B2B and 40% B2C, and in the next 3 years, you're going to emphasize the B2B business, and you are going to be, building more of a B2B business using this model. That needs to be stated up front in the investor presentation.
Okay.
The next thing where you need to make a change is this example that you take people through. See, a custom shoe is not a B2B product.
Yes.
So you need to use an example that is applicable to the B2B world as the example that you use to show the investors what does this product look like, or what does the process look like, but use an example of a B2B product. And that could be any of the categories. This could be a custom watch with a B2B logo, or a business's logo, a corporate logo, or something, clothing, whatever. But you need to use an example that speaks to the B2B business.
We do not focus on B2C at all. I'm so sorry to interrupt you.
No, it's not like you don't focus on B2C at all. You basically you emphasize B2B as your primary business. The B2C business is there and will continue to be there, but the strategic push is going to be on the B2B business. So you want to draw the investor in a way that it is the B2B business and the trajectory and the growth path of the B2B business that is what you're selling.
Okay. Okay.
Okay, so it's not like you don't do any B2C. The B2C is more inbound. The real customer acquisition strategy is more around B2B. That's what you need to emphasize, and the investor needs to understand that they're investing in a B2B business, not so much the B2C business, which is a slow growth business. B2C business is a slow growth business. It's the B2B business where you're going to get velocity. And again, the same thing. The more you can show examples of B2B products here as you're explaining your concepts, the better. Same here. Backpack, you could show that there's a logo, a corporate logo here, and you should show that in the example. I would take out shoes, and I put in another B2B category example. Right. So that's in terms of here also, same thing, bring in the nuances of B2B into this slide as well. Of course, the motorcycle business is slightly different. It seems like the motorcycle business is in collaboration with another partner, and that's a whole different angle to this. You can talk to that. That's okay.
Okay.
Now, again, same thing here is what are the core B2B categories needs to be called out and needs to be highlighted.
Okay.
So here, you're not even talking about the B2B business. That's something that is important. And then the other thing that worries me in talking about custom made as a success story is the company got its investment in 2011, and today it only does $24 million in transactions. That means it does what, 2.4 million or to 4 million in revenue. That is not a success story as far as venture capital is concerned. Investing $25.65 million to generate $4 million in revenue is considered a failure in the industry. So
Okay.
I would take this out.
Can I add
What
something?
you're showing here is a failed company as a success story, and that doesn't work.
If you be, can I say something, or am I interrupting?
Yeah, please go ahead.
So basically, look, when you talk of B2B marketplace, there's a lot of difference. There are too many players in the market. I'm talking of the Indian market. I'm talking of the US market as well. Where most of the companies, even though the orders are big, so they require, say, custom crew for their custom gear or custom gear for their crew. They don't need too much of what do you call experimentation. They just want a logo put in, or some other design or whatever, which is not rocket science. There are a lot of print-on-demand companies which are there here. Since we've been able to capture this category in India per se, we are getting a lot of orders for B2B as well, because they feel that when you say something bespoke, it's iCustomMadeIt.com. But then what happens, Ramana, is a lot of competitors come across to the fore, and not everyone is doing all too well, because it's a small market and the number of players is pretty high. Whereas when we say B2B, so I'll just give you a small example. I'm sure you're aware of the Tirupati Devasthan, right? So they wanted us to create something for them which is totally unique, which they wanted to present to dignitaries who visit the temple, right? So we created a bespoke pen in the form of the Lord, Tirupati Balaji.
Okay.
In fact, we just shipped them about 4 or 5 samples, paid for. And we just came to hear today that they loved it and they want to place an order for about 200 odd pens, right?
Okay.
So when we say B2B, we are different. We are more of a design thinking led company.
But that's great.
T-shirts.
That is what you need to bring out in this presentation. That does not come out in the presentation.
Right.
That is exactly what you need to bring out in the presentation, is that you have something specific. And then the other thing that we're going to bring into this presentation is the fact that you have a channel. The partnership that we helped you create with Power to Motivate gives you access to global corporations who are placing B2B bespoke product orders through you, right? This is not just an India business. That is a global corporate business, isn't it?
It is. So now we are creating something unique for the Indian maestro, the music maestro, A.R. Rahman. We'll be creating a handmade harmonium for him with all his songs and all that. So it has been 6 months in the pipeline and now it's frozen. So all his international concerts starting from New York in November, people, aficionados of A.R. Rahman can buy that, and it is going to be unveiled by him himself, right? So it is different.
No, I was asking you about, that's great, that's another good example, but the question I was asking you is about what kind of customers are you getting through Power to Motivate? Power to Motivate is a corporate rewards company, right? Loyalty management company. Yes. And you have started receiving orders through that channel. What kind of, is that global orders or is it India-specific orders?
No. It is only India-based orders. So Power to Motivate is slightly different. They are still expanding in India. So I wanted to give you an update on that, which is one of the reasons I'm here today. Is Power to Motivate is different. We've listed a few of our bespoke products. Their platform does not allow them to customize, right? So they're more into branded products. So say a Samsung products or Sony products and so on and so forth, which honestly speaking is not something which ICMI caters to, but we've been doing that because of course B2B is B2B. So we've got vendors, we've got about 10,000 SKUs in the last 3 months, and today they rely on us for most of the orders. It started off with 1 order, 2 orders a day, now we're doing about 30 orders a day, right? So about
I don't understand, what are you, so they're not ordering custom products?
No, it's not custom products.
What are they ordering?
It's catalog. So they want a catalog. The companies, so it's catalog reward marketing, right? So it could be one of the employees in their concerns orders a TV or a fridge or a pen or a whatever, right? We are now talking to them to see how they can expand their platform where they allow customers to customize, right? So you want a pen and you want to
that was my whole point of introducing you to them, is that they would include custom ordering capability through your platform in their platform.
No.
Whatever else, the fact that you're generating revenue with them right now through some catalog product, that was not my intent. That's good, that's fine, but that's not what I intended. The reason I introduced you to them is so that you can plug, your platform into their platform such that their corporate customers can order custom products through you. That was the whole point of the relationship.
Yeah, but unknowingly you opened up a avenue for us, which is really awesome. Okay, we are now doing about $15,000 of sales a month with them, and we now seeing our service and our SLA adherence. Now they're paying us in advance, right? Now we are slowly working with them in a scenario where, since we cater to a lot of B2B. For example, today Barclays, Citibank, for their international orders, it could be backpacks, t-shirts. They trust only iCustomMadeIt, right? So we get a lot of high-ticket items. So now it has come to a scenario where P2M trusts us, and we would also be selling their programs out here in India. So if Barclays is my customer, for example, I would be selling the P2M customer loyalty programs also. My team would be selling that out here, which is good. We have one more arsenal up our sleeves, right? And we would also be the vendors who would be doing the product. So it has been a wonderful thing in terms of money. There is no so much about it. And they are open to customization, but it will take them some time, Ramana. They're just setting up in India. But it looks
so right now you basically, there've been a good revenue generation path, but it's not, they're not fully integrated with your platform yet. And they're not doing custom. Got it.
No.
Okay. So that's fine then. That actually clarifies. I didn't understand that. So I'm glad that we have that squared away. So so the thing that again, you're leading with B2C. Let's go back to the presentation from an investor presentation point of view. Let's go back and revisit this. So here you're again talking about B2C first, and then B2B as an afterthought. I would flip that around, because your business is 60% B2B, 40% B2C, and your B2B business is growing faster than the B2C business. So you need to lead with B2B and then bring B2C later. So this $23 million B2B business that you're highlighting here, so $23 million B2B business, that's the top line though. You're getting only what, 10, 15, 20% of this?
Yes.
So that's your total available market is not 23 million. Your total available market from B2B is, whatever, 2 to 4 million, whatever is your commission here. And the same thing on the B2C side, your total available market is just 25 million here, or maybe 50 million, depending on what is the commission structure. So we're talking about, again, all this, your total available market is the revenue potential of your company. It is not the total amount of sales that you do. So the total available market analysis is all wrong. You need to lead with B2B, and you need to come back to B2C. And the problem with B2B is it's a very tiny market. What you're talking about is a very tiny market. Having said that, you are, you are getting a good kind of traction in that market. The case is that you're going to first, stitch up that market, and that's going to give you a lot of cash. So let's say, what is the percentage of commission? What is the average percentage of commission? 10 or 20?
P2M or what?
Yours. The product that gets sold on your platform.
Yeah. So the minimum is 18% for B2C. I'm talking of B2C. So now these are two different things again. For B2C, our percentages range from minimum of 18% to 30-35%. right?
Okay.
And for B2B, it is around 10 to 12% max to max.
10 to 12%. Okay, so here your total market, then you can't spin this as a B2B business. See, the thing that the problem with what the disconnect, this is why I wanted to talk to you for months. The problem that we have here is that even with the Power to Motivate story, until you can roll out your custom product story into the P2M story and you access their global market, you don't really have a great compelling B2B story. Right now, you're talking about a B2B market opportunity in India of 2.3 million, maybe 2.5 million, which is minuscule. What about the global? You know, if there's a $21 billion, where are you getting these numbers from? I don't know, but whatever, if it's 21 billion top line, the number is actually 2 billion. 2 billion is a good number, and if you have P2M, if you have the P2M integration done, and you can access the global channel for products that you can, custom products that you can sell through P2M into their global customers, then you have access to that $2 billion market. That is more interesting.
Right.
And that was my whole point of introducing you to P2M. You're getting sidetracked into a lot of other things. You're now trying to sell their software platform. You're trying to sell catalog on them, and that's kind of side money. But from an investor point of view, side money is not what's interesting. The main business is what's interesting. So the story that you're going to need to tell here is that there is a little market in India that you are currently selling into, and you're going to make $1 million, $2 million in revenue from that market, but really what you're after is the global custom gifting market, corporate gifting market, and you are in, right now you are in conversation with P2M as a primary channel for that. And you're already doing business with P2M, you're doing this, that, and other things, but what you're trying to steer the P2M relationship to is your core business, which is that they are going to be, their customers, corporate part customers are going to be ordering custom products through your platform. That is a story that is interesting to investors, because that opens up a $2 billion market.
Right.
And you need to state that. So that's one change that needs to happen in the B2B part. And in the B2C part, you need to basically structure this as like it's a $25 million market in India. Actually, maybe a bit more because the commission on the consumer is more. So let's say it's going to be more like a $30–35 million market in India, of which you have started penetrating that market. And the global market is going to be hard for you to reach on this one, because even the US market is going to be hard for you to reach because you don't have a channel. Customer acquisition is going to be expensive. So what you can say is that for the B2C business, your primary goal is to pick up that, is to focus on that $35–40 million Indian market. And that's something that is already, you are in that market, you're going to build that market, but really what you're after is this B2B US market using P2M as a channel.
Absolutely. That's a fact.
So this re-engineering of the slides and how you present that story needs to be done. Again, the same thing, you have a lot of examples of B2C all over the place. You need to turn them into B2B examples so that your story is a B2B story. So this is a story. If the story is that you already have a channel partner that is going to help you access the $2 billion US market through that channel, B2B, that is a story that investors will buy. If you're talking about a $2 million Indian market and a $25–30 million Indian market, that is a story that investors are not going to buy.
True. Got it.
Okay, so this presentation needs to be repurposed. Your story needs to be repurposed. The other thing that you need to do, Maureen, could you please put the Incubation Radar link in the public chat so Raj can access it? Go to this Incubation Radar link, and study, we have an incubation radar questionnaire. I would like you to fill that out so that, because that is what I use to introduce people to investors, and I need you to fill that out. After you've repurposed the story in terms of the slides, you need to tell that story through the incubation radar questionnaire. And then we will turn that into a published piece. We're going to publish a piece on that, and I'm going to use that to introduce you to investors. This is these are the next steps that we need to do quickly. If you want me to introduce you to investors, I need these steps done quickly.
Right. Got it. Got it.
Okay? So those are your next steps.
Done. Done. Thank you. Thank you, Shraman. I really appreciate it.
You're very welcome. Very welcome. Okay, folks, we have one other presenter, and that is Elvis Forson from Ghana. Elvis, are you on the line?
Yes, I'm here.
All right. Just speak up a little bit. Your line is a little bit faint.
Okay. Is it much better?
It is much better, yes.
Yeah.
Go ahead.
Okay, all right. So I'm Elvis, and I work with a startup from Netherlands here in Ghana. I represent them in health, and I was just working on setting up a payment platform, and I realized the payment platforms we have nothing to do with health, and so I created something next. So my creation is just about getting low-income foreign workers in the first world countries to be able to send remittances in a more cost-efficient manner. And you could say it's the application of the sharing economy. And just a few points. There were remittances across the world dropped by 2.4%, not across the world, but to developing countries in general, to 440 billion in to 429 billion in 2016. And in Africa, remittances didn't drop by just 2.4%, and because that's an average for all developing countries. In Africa, it dropped by 6.1%. And so it came down to a total of just $33 billion. And in Ghana, our remittances is about $5 billion a year. My idea here is quite simple, that get people to pool their resources together and to carry out this remittance, thereby cutting the cost of remitting and even lowering the total value of money that an individual can remit, and when you take the cost of remittance out. So this is a relatively small service that's quite significant. Next. So customer acquisition, you're supposed to work with diaspora associations, and generally, as you see in the last question, this is also coming up with already existing remittance services. The idea about enabling the shared economy can be applied in two areas. First of all, many people can come together to remit one person. So you can talk about siblings who are trying to remit their parents down here in Ghana. And then, so that's many to one. And then you also have many to many, where you form groups, and then each of them have a micro amount of money that they contribute weekly. And then they take turns in remitting each other's dependents, we call
Elvis,
them. So if you go to,
let me try to understand what you're trying to do. So
yeah,
you are going to create on the two ends of the remittance process kind of pooling platforms. You're going to put a pooling platform on the sending end, and you're going to put in a pooling platform on the distribution end, where you gather multiple people's money with proper documentation of who's putting in what and who and who does that need to go to, transfer the money using a regular service like a Western Union and so forth, bring it into your account, and then do the distribution on top of that, on the other end, according to your original specifications. Is that what you're saying?
Yes. Yes.
So what are can you explain? Go ahead.
Sorry, I didn't get that.
I have a question. The question is, how do you, what are the numbers? Like, what are people saving by doing what you are doing?
First of all, I haven't gotten the full figures for saving. The main selling point is the main selling point is the fact that they can pool these resources, and then as a step two, the fact that they can guarantee what these resources are for. So for RX remittance, when these remittances are brought in, they can only be cleared at a hospital billing facility. So they can't be taken out by the individual. So there's also the feature of targeted remittance. Targeted remittances.
Elvis, whatever it is that you are trying to do, you need to understand the mathematics of that. So who's paying what, who's saving what money, these things we need to understand. So what is the total fee structure of this remittance? And how are you making money? What can people do today and can people not do today? For instance, if you have to use Western Union to do micro-remittance, what can they do, what can't they do, and what are the cost structures? So your presentation is extremely vague right now, and that's just not enough. You're going to need to really get down to the details of the arithmetic of the process, of what can be done, what cannot be done, etc.
Precisely. I get that. Yeah, I think it was just a 5-minute presentation, so.
That's fine. Do you understand? Do you have those numbers?
Yes, but I don't have them offhand. This is done 6 months ago, and we are working on the pay bills sector at the hospital. So with the hospitals in Ghana. So I've forgotten the numbers, but it was something like 20%, saving a total of 20% on the remittance cost to an individual. And when you group that, it has a compounding effect on saving. That was a major factor. But I'll have to say that my other aim was to also try and track this estimated value of 12 to 15% of all remittances being for health, being able to track that amount of money and demonstrate that that amount of money is being brought into the country, and therefore make a case for more investment into health against this float balance, which comes into the country, Ghana and the other countries. So I surely have to get the figures up again, but the idea is, yes, to save costs. It came down to about 20% of cost, but also to create a certain guarantee of specific remittances, like those for health, that these remittances end up directly in the hospital and they can get a report of the bill, those who send the remittances. And the last one is to create a float balance that will demonstrate that, for example, the health sector is responsible for a big, this great amount of remittances, and so warrants some investment.
So if, right now I'm going to put an if on whether your mathematics work or not, because I haven't seen a working mathematics analysis here. If your mathematics works and people do have interest in using your service, then your question about customer acquisition, the best way to do it is through Facebook. You want to find target ads to people who are from Ghana, for instance, who are in the UK perhaps or in the US, and you need to target your ads to those kinds of people, and that's the best way for you to acquire customers. That's the most targeted way.
Yeah. My last question is for the remittance companies. Do you think this is a good idea to approach them with, or you think it should be something that's set up?
I have no idea. Until I see the mathematical analysis, I cannot comment. Okay. I don't know whether this is a good idea or not, because you have not convinced me that your arithmetic works, and until I am convinced about that, I can't comment whether it's a good idea or not to approach anybody.
All right. Thank you very much.
You're very welcome. So, folks, if you like what we are doing here, please refer serious entrepreneurs to 1M by1M. And the word serious is in bold because we don't want fly-by-night people who expect to be rich quickly. We are looking for people who have the tenacity to build businesses. And as you saw in the discussion with Cindy earlier today, it's multiple rounds of financing, navigation. Sometimes you just pure brute force bootstrapping to actually get to customers and revenues and profits. This is very difficult and very, very taxing on your nerves and on your body and mind and everything. So we really need people who are willing to do that kind of heavy lifting. If you are, then we have a ton of resources at 1mby1m.com. You have a blog that you can follow. You'll learn a lot from the Entrepreneur Journeys book series. There are 12 volumes of those. You can learn from them. They're case study-based books. You can come to these roundtables. We are here every Thursday pretty much, 48 out of the 52 Thursdays we are here. Our full acceleration program is 1M by1M Premium, and that's a $1,000 annual membership fee. You get extensive methodology guidance, project guidance in our private roundtables like this. We have an online curriculum which helps you learn methodology. Like if you don't know what total available market bottom-up analysis is, you can go to the curriculum and learn that on your own very quickly. We help you with business development, we help you with financing, and we help you with getting the word out there about your company, which is very important. The 1M1M self-assessment is a set of questions that we urge you to ask yourselves about your business. It's something these are strategic questions that you need to answer. If you run into methodology gaps in doing the self-assessment, sign up for 1M1M Basic, which is $99 a month, and you can get the curriculum and learn the methodology on your own. You do not have the project-based consulting that is part of the premium, but you still have the curriculum, and you can learn a lot from the curriculum. So dig around on the website. You'll learn about the program, what to expect from the premium, basic, etc. Lots of FAQs, video FAQs. You have details about the curriculum. The curriculum is based on over 750 successful entrepreneur case studies, including 50+ unicorns, 400+ VC-funded businesses, 300+ bootstrap businesses, and you learn from other people who have done it before, and it's incredibly effective. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you're going to have to validate, and then you would be able to raise money. That's it. There's one more roundtable in September, and there are 4 in October, every Thursday pretty much going forward. And then we have next week, we have the first in-person rendezvous with me at Cafe Boroni in Menlo Park. If you're in Silicon Valley and would like to meet me in person, you're welcome to come at 5 p.m. to Cafe Boroni, and I'll be happy to chat with you and meet you and get to know you a bit. That's it. We are kind of towards the end of the session. We're already 4 minutes past the end of the session, but if you'd like to ask a few questions by calling in or in the public chat, please feel free. We'll just stay a little bit longer and answer your questions. Peter Davis is saying that he's going to be pitching next week. That's great. Anybody else? Any other questions, comments, feedback, issues? Let me also introduce you to Irina Patterson. Irina at 1Mby1M.com. She'll answer your questions about the program if you have any. Anybody else? Questions, comments? Elvis is asking, do we have repitching opportunities? You have plenty of repitching opportunities if you're in the premium program. In the free public roundtables, you only get one chance to pitch. But if you want repitching opportunities, join the premium program and you can pitch as many times as you want. Anyone else? All right, folks, I don't see any more questions. We are 5 minutes over time, so I will adjourn the session for now, and we will meet you back here next week. And remember, this is a working session. We work on your business, and all the sessions in the premium program, the roundtables, are all working sessions. You get tons of working sessions to work on your projects. See you soon. Bye-bye.